Thunderball. So me give it up, so me give it up, so me give it up to our girls. 5 billion and 40 naughty shorty. Baby girl, all my girls, all my girls. Thunderball say, well, woman, the way this time cool, I wanna be keeping you warm. I got the right temperature, to shelter you from the storm. Hold on, girl, I got the right tactics to turn you on. And girl, I'm in the papa, you can be the mom.
didn't blink, I let it in my eyes. Like an exotic dream, the radio playing songs that I have never heard. I don't know what to say. Oh, not another word. Just la 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 la. It goes around the world. Just la 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 la. It's all around the world. Just la 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 la. And everybody's singing la 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 la. And now the bells are ringing la 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 la. La 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 la. La 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 la. La 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 la. La 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 la.
My inspiration comes can be to hear the tune. Around my head it goes a magic melody. You want to sing with me, just la 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 la. The music is the key, and now the night is gone. Still it goes on and on, so deep inside of me. I know the
la la la. And now the bells are ringing, la 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 la. La 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 la. La 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 la. La 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 la. La 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 la.
I hate DJs that grab the mic and yell over top of the music. Let's make some noise! Good morning. Hey, it's a today. It's a today. Might as well do some trading since the sun came up. Beautiful day. Look at that. Smoke on the water. So, without further ado, I think I marked it. Let me mark it again. All right, so this is the beginning of the webinar. Good morning. It is approximately 8 a.m. in the New York, which means there's about an hour and a half before the stock market opens. This is a good opportunity for the 17,000 members of our Forex.Today community. 17,000 traders. Pretty amazing. Good time for us to get together, share some ideas, share some plans, help each other emotionally through these COVID times, or maybe even just through being a trader. So we can do technical analysis, fundamental analysis, trader psychology, just hang out, tell jokes, sing songs, all that kind of stuff. So get involved. You control the agenda. So be careful what you say. You might just get it. I tend to give 25-minute answers to one-sentence questions. But you learn. Okay, so my goal isn't to put you into a trade. I'm not here to tell you that I'm a billionaire trader, that I fly in a jet everywhere, blah, 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 blah. Dude, I'm just like you. We're sitting here. We need to do our job. This is difficult. We need to have supreme focus. And, of course, a ridiculous, sickening work ethic. Think of it as the get rich slow scheme. That's where we are. So if that turns you on, if that's your hot button, you're like, wow, yeah, Forex is actually a business. I'll actually have to do work and create value. Yeah, if that's what turns you on, you're in the right place. So without further ado, 3, 2, 1, hit it! Can't get you out of my head, boy. It's all right for 5 minutes, but anyways, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results, but cheer up. Stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. I mean every single word of that. Stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. It's true. Now, 20 years ago, I used to say, welcome to Forex.Today. Let me remind you that the purpose of Forex.Today is education. This is not an alert service. I am not here to make trade recommendations. But I will conduct technical and fundamental analysis in real time. Oh, that's not quite right. I will conduct technical and fundamental analysis pip by pip, candle by candle, with the overriding goal of helping you put together trade plans throughout this New York trading session. If you're trading along with me using a demo account, then regardless of whether your plans are successful or not, you will have an opportunity to learn. Now, the NFA would like me to add, however, past performance does not predict future results. So anyways, stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. I mean every single word of it. Okay. So, hey, welcome. My name is Wayne. I'm just like you. I'm just 20 years ahead, and I'm doing my best to reach out to you through technology to share my experiences, and I hope it'll help you some positive way. I've known many of you for a long time, some of you 15 years or so. So very cool. I'm very blessed and very lucky to have you part of my life. So thank you for being here. So yes, yesterday we went through the calendar. We set up the week. We know FOMC meeting is this week. Day one is happening. So that's pretty interesting. But we should really know what is in play. So it really comes down to, do they change any of their rhetoric? Okay? I don't know. Probably not, but that's the interesting part. So we'll have to pay attention. We're also paying attention to seasonality in the swing trading group, in my live trading group. We've spent a lot of focus in the last couple of weeks on seasonality. So we kind of like know where we are on our journey, which is important. Okay? We even built a Venturi had used the flow of water as an example of where we are in the year. Yeah, that actually happened. Very cool. Also, if you're part of that group today, I am doing macro lecture number 2, and it's going to be a doozy. And then I was thinking about lecture number 3, which is next week. It was supposed to be something else, like the factors of production. But I thought, you know what? I should probably put a bridge, a gap in there. Would it, right? I thought maybe next week I will give you an entire high school or freshman college economics course in 1 hour. like just like 3, 2, 1, go! I just explained all the concepts of, economics 101 so that we can skip on to the awesome stuff. How many people would be into that? See if I can cover everything you would learn in a year of AP economics in high school or a freshman college course. And we bang out the whole thing in 1 hour. Why not? I can do it. I'm qualified. I got the piece of paper that says I can do it. Yeah. And there, at least then you can go back and just watch it 5 times if you're brand new, right? Ananda says, hey, can you recommend a book for you to read and buy? I'm actually building a course, and or not a course, but a group. And it's been delayed by COVID and a bunch of other things. I actually played around with it earlier today and imported to the book club The Intelligent Investor, which would be one of the first books that we read as a group. And it's Warren Buffett's favorite book of all time. So I thought maybe that could be one of the first books. Also imported Reminiscence of a Stock Operator, which is also, I've never read these books, right? But they look like very interesting, completely different books. Okay, so that's in the play. And once we get that up and running, I'd like to read 50 books this year. 50 books this year. In 2021, read 50 books on economics, investing, trading, psychology. Might even throw a few in there for health. Okay. I should write another book. I am going to write another book, probably not this year, but maybe next year. It'll have to do with starting a fund. Okay. So, anyways, let's get on with this. You're at Forex.Today, so you're going to ask questions, you're going to take notes, and you're going to write these things down. My job, again, isn't to put you into trades. Instead, what I'm going to do is do my best to teach you how to make those decisions on your own so you're completely independent. Okay? Completely independent decision maker. Because then you can trade on your own regardless of whether you agree with me or disagree with me. What I don't want is a community of blindly following minions. And I say, you should buy Euro, and everyone buys Euro. Woo! You're like, come on, dude. So yeah. So, great. So I'd like to thank you for being here, and I'd like to thank you for your the thumbs up button when you click it, and subscribing and leaving comments. All that tells YouTube that this is quality content, and I'd appreciate it if you told YouTube this was quality content and that it was meaningful, that I get out of bed for a reason, right? What else? Oh, hey, thank Traders Way. If you trade Forex, right, or gold or oil or Bitcoin, you're going to need a broker, and Traders Way is a broker. So it's one place to start. I like them. Great. Okay, so there's my endorsement. You should check them out. See if you like them. What you do is you go to tradersway.com. In the bottom right-hand corner, there's a little tiny form to fill out to open up a demo account. Boom. It takes seconds. Now you're in the back office. You look around. You're like, hey, everything's clean and organized. You can download MT4, MT5, CTrader, whatever. Play some trades. Get to see the execution speed. It's fast. The spreads are narrow. Swaps are big. If you rather have an ECN account, they're a little bit faster, and you pay fees instead of swaps, so maybe that's easier for you. So you try all of that, and what they're really asking for is an opportunity to earn your loyalty and your respect. That's the big sales pitch. They would like an opportunity. Please give them the opportunity for them to earn your loyalty and respect. And then when you're ready to trade real money, you'll say, I already know who my execution partner is going to be. And that's tradersway.com. Can't get you out of my head, boy. All right, so I was doing some work here over the last hour or two at my desk, and I set up 3 trades. And I missed them because I was working, and not working like trading working. I was working. One of the things I was doing is setting up that book club. And I set them all up, and I'm like, no, I need to come up like 8 more pips, and then I'll sell over there. And I missed the whole damn thing. Okay. Okay. Is there an 8-week cycle to market behavior? Yeah, I believe that could be an 8-week, and of course there's 8 years, so there'd be sub cycles in there. But yeah, why don't you take a look at how often the Fed's meeting? So today the Fed is starting their 2-day meeting, and then you should open up a chart. And by the way, we did this 2 weeks ago, I think, in my live swing trading group. We got together as groups specialized in currencies like Aussie, for example, or CAD or something like that. We broke into CAD groups and Aussie groups, and I had them go back as far back as their chart would go. I think I tried to say 2008, and map out tops and bottoms of the market to try to pick out any sort of pattern in seasonality, and then also plot when the central bank of that currency changed policy, either raising interest rates or lowering interest rates. And then inside of that, what you could do, Theta, is then on all those charts, mark out the weeks in which central banks had their meetings. Okay, and then you would, instead of listening to some dude, right, that's a professional trader, and they say, oh, there's an 8-week cycle. Instead of listening to them, because remember, people is stupid, so they'll believe it even if it doesn't exist. So what you should do is go back and, with scientific methodology, prove it or deny it, right? So what you would do is then mark all the Fed meetings and say, oh my God, it might be an 8-week cycle based on that, or maybe it's not an 8-week cycle, maybe it's a 7-week cycle, right? Yeah, I saw that, Cameron. I said, hey, drive safely. I typed it, but you can't see it because you're driving. David, start at FX Bootcamp's YouTube channel. There's a training course there. Okay. Yeah. Well, so Theta, there might be truth to it. So go find that out. And I would, like I said immediately, I said, yeah, there's likely is. Okay, there likely is, and it's probably due to central bank meetings. Okay, so you would do 2020 FOMC meetings, okay? And you would look up the old calendar, and there's 2021, so you'd go to 20, and you'd say, okay, January 28th to 29. Okay? Then you would do March. That's a jump in because of the thing. Okay. Unscored. Yeah, these are like the Fed freaking out because of COVID. So they did it earlier. It's funny, I don't even remember that anymore. It's amazing. So anyways, you go through and you plot these. So let's do 2019. So in 2019, okay, you plot them. Plot it, plot. And then you go to 2018, 17, 16, 15. And see if you believe, based on your scientific research, whether those provide some sort of key turning points from bullish to bearish to bearish to bullish, or what it could be is bullish for 6 weeks, and then people kind of take profit waiting for the next meeting, and then the next meeting comes out, and then it takes off again, right? But you want to find the truth, all right? And remember, like at Harvard, we say Veritas. And it's sort of the Illuminati thing, but the Illuminati doesn't come from genius. It comes from knowledge. It comes from, you just simply know because you did the work, you did the research, right, Theta? And you're like, you don't need to read anyone's book. You don't need to take anyone's course. You don't need to hear what other people think because you're like, you know it to be true because you did the work and therefore you're illuminated, right? Veritas, right, the truth. So there you go, Veritas. Activate the closed caption. I think I have to upload those, but I don't have those. Yeah, I don't know about that, but no, that would have to do, again, more with monetary policy. I would say, are you in my live trading group, Theta? Because we actually went through over the 2 weeks ago, and then last week we actually went over seasonality, right? Which would counter the point of 1 year is bullish and 1 year is bearish. That doesn't make sense. Everything is set by the Fed. It's easy. So that I'd say no. Now he's out there in la la land. Okay. All right. So anyways, I was looking at this. I wanted to enter this one, but I didn't because it went too high. It's predicting an inside week. It's a 618. I'm already in, so I didn't take this trade. But the other two, peso, I looked at and said, oh, beautiful, because I almost did it yesterday, but it was too aggressive. I can't sell into the 21. But this you could sell into the counter trend. And in fact, we talked about it yesterday, and that you would do it, but you probably wouldn't believe it, so you would manage it, conservatively, right? You guys, I hope you remember all that. And of course, I wasn't here in that particular hour. In this particular hour, which is London Open, I was sleeping. So I kind of looked at that and thought, well, maybe they'll be up in the head and shoulders. Maybe I get it tomorrow. So then I look at ZAR, and I missed it by about half an hour. I just wasn't at my charts. And where's my drawing tool? And I'll tell you what I did, because like I said, I was at my desk and I was working, and we were here. And I said, oh, sell here, as you can see. And it just went, oh. Okay. So yeah. See, you have to think of it this way. Look where my entry is. I wasn't aggressive selling there. If I was trading, in the middle of the night, I would have been sort of in here. And even then, I may have only been convinced because of the peso. So anyways, I took what I thought would be a moderately aggressive trade, but I still couldn't sell low, and I missed it because we're supposed to be selling here. So just sort of the consequence of I wasn't at the right place at the right time. And that's the tough part of intraday trading, isn't it? Right? Yeah, David, we got that the first 3 times. So now just stop typing and sit back, listen, take notes. If you have a question from time to time, feel free to ask. But like I said, you should probably get the link. Jim provided the link. There's 4 videos you can watch for free. You can watch that. If you like my method of teaching, maybe you join FX Bootcamp. Maybe you read my book, maybe you do, but, sitting here and, we get it. You need help. Great. I've been here for 20 years. Where have you been? Right? Sit down, relax, take notes, watch those videos, maybe read my book or read someone's book. But we're in a time where all information is available almost in real time. Like if I wanted to know how to bore a hole into my concrete floor in my basement, I could just go to YouTube, I could type it in, and there's probably 100 videos on boring into concrete. And I'm like, oh, cool, now I'm an expert, right? So, yes, the YouTube link, yeah. So, if you don't know something, I only have this much sympathy because there's so much information. Boom, boom, boom. So you're in the right place, but, relax and then start putting together a strategy and plan for you to know. And the resources are here is the other thing I'm saying. If I've done, 5,000 YouTube videos in the last 15 years, at the very least, you could watch all of them. Right, David? So you're in the right place, man. Just relax. Just hang on. Right? Cool. Yes. We are doing it's not fundamentals, it's macroeconomics. Okay. So, like, for example, one of the questions I asked last meeting, I said, Nigeria and El Salvador have the same levels of GDP, right? The same number, GDP is equal. Which country do you want to live in? Does it matter? So, in this case, I'm going to prove my point. I only discussed it, but this time I'm going to prove it, right? So anyways. All right. So, tiptoeing through the tulips here. And there's a bit of a risk on again, which is great. Probably has to do with people expecting the Fed to continue doing what they've been doing for years. Yeah. Oh, no need to be sorry. No, I need to be precise sometimes. Okay. So dollar has lost a little bit of its weakness. Yen has lost a little bit of its weakness. Euro and Kitty CAD were strong yesterday, and they're kind of, not Kitty CAD, sorry, New Zealand. So Kiwi is maintaining, and everything else is sort of mediocre. So I'd look at this, and this looks like a lot of mediocrity. Okay. Alton took one of the shorts that got spooked from the last spike. Well, yeah, that's why when you take the trade, you must have a plan. and you look at the risk reward ratio of your plan. You put your stop where the stop needs to be, and if the stop is far away, then you have to ensure that the reward is worth it. So like a typical risk reward would be 3 to 1. So you got all that set up. You should like it technically. You should like it fundamentally. You should look at it and say, yeah, I think I'm going to make money on this. And then you take the trade, you put the stop, you put the limit, and then don't watch it anymore. Walk away. Okay, Alton? Therefore, you don't get spooked anymore. My best trading happens when I'm sleeping because if anything, I'm going to screw up my own trades. You see what I mean? So I'm at my best when I set them up, and I'm at my worst when I'm watching them. Because if I sell and it starts out okay and all of a sudden green, 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 I'm like, oh no! But I should have all of that planned in the plan. Right? Yeah, so screwing it up, like if I'm gonna watch it, I'm gonna get spooked, like you just said. So a great, I would have to say my favorite trading is trading in Asia. And this is me personally because I live in the New York time zone. I trade Asia, I go to bed, I wake up, and now I check my trades. Right? I check them. And usually then I still don't even have enough profit to even move my stop, right? So it's usually the next day I have to move my stop to -3. That kind of thing, right? But don't watch it. Also, if you are staring at one trade, just to add to that, Alton, you're going to miss all the other trades. And remember, your lot size is so small relative to your trading account, your lot, right? Your lot size versus your assets under management. It's so small that you need to have many trades on, not just gambling on one trade. Okay, you got to have many trades. So once you've got it set, move on to the next one. Or at the very least, one per day, right? So the next day, move it to break even, find another. Okay? So, like, here's a challenge I wouldn't give you this time of year, but I might give it to you later in the year. Like, do you guys remember, I think it was March of last year, I asked some of you to volunteer, right? Which means only if you want to. Try to have 30 open trades by the end of the year. How many people remember that at least? Maybe you didn't do it, but 30 open trades. James says, Wayne, I thought I was a beginner. We're supposed to just concentrate on one pair. I've dedicated an entire chapter of my book, James, that would disagree with what you just said. Right? I keep looking for my book and I don't have a copy of my book. I guess I gotta, no joke, I'm gonna have to go to Amazon and buy my book. Anyways, so the answer is no. Let's put it that way, okay, Jimmy? The answer is no. You need to specialize in one currency. The dumbest thing you could do is one currency pair, in my humble opinion. Oh, no. Don't do that, Alton. But thank you. Okay? Because if you do one trading pair, by the way, you probably got that from a different guru. I would never see, like, we have a professional track of traders that are learning how to be portfolio managers. They trade one particular pair only because we're not working on, like, analysis per se of macros. We're not working on analysis of portfolio balancing or structure. We're working on discipline. Do or do not. Okay? Now, in the real world, if you're making a decision on your portfolio structure, aka what should you be trading today or now or this month or this year, if you just did euro dollar every day, you would be trading it at times when it's not good trading. When, let's say, both euro and dollar are relatively strong, or both euro and dollar are relatively weak, they'd be terrible, maybe not terrible, but you might make, let's say, 25 pips on a trade on euro dollar, but if you'd done the same thing on Aussie dollar, you would have made 70 pips. Okay? So you're missing out on the benefits of things like relative strength, like fundamental analysis and macroeconomics and changes in central banking policy and all these things that set up the current. So if you just trade euro dollar every day, you're not going to be happy with your results at the end of the year. And even if you are happy with the results at the end of the year, then I'll show you if you had just made better decisions on what you were trading, you probably could have made, let's say, double the money. And you're like, double the money? Why? Because Aussie dollar moves more? Well, you traded a currency, let's say, that generally speaking moved sideways for much of the year, where Aussie dollar or something else trended. You see what I mean? So you were trading a sideways trade when you could have just traded exactly the same way. Instead of buying euro dollar, you bought Aussie dollar. No technical analysis different, right? I mean, one's trending, so you're buying dips and stuff, but no technically more difficult, not more leverage, not more risk, but generally behaving the exact same way on a better horse. You're betting on the better horse, right? And so Aussie dollar takes off, but you don't look at Aussie dollar because you only trade euro dollar because you're supposed to be specializing, which is dumb. And then all of a sudden your results are mediocre at the end of the year. And then what are you going to do? Think of this, James. What are you going to do if you believe your results are mediocre? They're not satisfying to you. You're going to change your behavior. And you're going to say, well, maybe if I increase my lot size, I'll be happier. Or maybe if I try a different technique, if I only knew Elliott wave, that would save me. If I only knew how to use the CCI index or oscillator, then I'd be saved, right? Oh my God, I need a GAN fan. If I used a GAN fan, then I'd be successful. And what you don't realize is you're just betting on the wrong horse. Your selection. Okay? Think about it. Much of our work is similar to, let's say, a venture capitalist or a leverage buyout firm. No matter how smart you are or how much money you have, at the end of the day, one of the most important factors of your success at the end of the year comes down to your selection, your deal flow. So we could have 3 or 4 or 5 equally talented traders, but you can get different results because they have different deal flows. They're making different selections. Now, as a venture capitalist, it comes down to which entrepreneur. It's 1,000,000 to 1. Any of them are going to work, so they have to have a good selection, but they also have to have deal flow. Now, you happen to have all the deal flow in the world. You can do any cross you want, any pair for any reason, so you got all that, but you still now have to select from that. So I understand maybe if someone said, well, just trade euro dollar every day and you'll get really good. I would disagree because you're going to get frustrated because you're not getting the results you expect. And you're not insane, therefore you'll change your behavior. You're only insane if you do the same thing over and over and expect different results. So you will change your behavior, and that would be the problem. Instead, I'd say, okay, why are you buying euro dollar? And you're like, I don't know. I'm like, okay, well, let's focus on the US dollar. Okay, just sell the dollar every day. And if you don't like selling it versus euro, which means buying euro dollar, well, then go see if you would rather buy Aussie dollar, or maybe you'd rather buy Kiwi dollar, or maybe you'd rather sell USD CAD, right? Or look at dollar versus Noki, dollar versus this. All of a sudden now, You know the one thing you'd want to do, which is the better form of specialization, you want to sell a dollar. And now you look across the entire spectrum of the planet's currencies, and you do your deal flow selection. And you say, well, today I want to sell the dollar versus New Zealand. And now you've made the better choice. Okay? Versus you trade this every day and it's just starting out. But you could have just been rocking it since yesterday. Kiwi's been a good trade. Okay? And again, you're not changing your technique, your behavior, your aggression, nothing. All you did was select a better currency. So I would never put you in a corner, right? Never put baby in a corner. I would never put you in a corner and say, right, you have to do this. Now, in portfolio construction now, we're worried, like now I'm talking about like a hedge fund with multiple portfolio managers, not just some dude that can trade good. Okay? That's amateur hour. In a proper fund where you have different managers and different themes, you're not necessarily looking for overall return. You're looking for reasonable return, but with low volatility in the overall portfolio. So we're concerned with things like Sharpe ratios over long periods of time. Okay? And therefore, I would have someone only trade euro dollar long every day, but I'll also have another person only trade euro dollar short every day. And euro yen traders, right? And euro Swissy traders and euro dollar or whatever, right? And you mix these guys together because we know over the long run, which a fund is very concerned with, right? Generally, we make macro decisions and then trade them technically. So we need trends. So over the long period, let's say between January 1st and January 1st, with a portfolio constructed as a team, we will catch every single move, bullish and bearish, which one individual person can't do, especially on every, sort of major currency pair, right? On all time frames for all reasons. But that's a whole different process, right? And that's because I could take like somebody like Maida, for example, and because she's so skilled and so talented, and she carries such an amazing professionalism and work ethic that I could say, hey, Maida, I have a client coming into the firm who's overexposed to euro dollar and we need to hedge. So I need you to be, let's say short euro dollar all day, every day for all reasons on all time frames. And she can carry that out. It's not that she can't do anything else. She will be doing other things on her own account, let's say, but that job needs to get done because a client would be paying us and that would be her value add. And that's different, right? Again, that has to do with under the umbrella of a professional firm. Because as you become more and more professional, you'll become a product. Okay, and these are sort of the topics, someone asked if I'd ever write another book. This would be sort of like the topics I'd be talking about, right? You can't hang out at your uncle might invest because he's amazed that anyone in your family is as smart as you are, and he's got some money. So he's like, all right, play with some money, make me some money. And then a little farther out, your uncle's buddy will invest in you because you trade good. At some point, you're going to get to a point where someone will need you to trade for a reason, not because you trade good, right? So ultimately, you should move away from specializing in one currency. That's an advanced thing. And whoever your other guru was, isn't that smart. Because that's a dumb advice for an amateur. Instead, you should get really good at doing things like this. So if I had you specialize in one currency, again, I dedicated a whole chapter in my book to this question. I would say, like, you could specialize in the US dollar. And now you can look at it, and every single day you're essentially creating an indice. So Aussie dollar versus the US on a 4-hour. Pound versus the US dollar on a 4-hour. Euro versus the US dollar on a 4-hour. Kiwi versus the US dollar on a 4-hour. Dollar versus CAD on a 4-hour. USD Mexican peso should be on a 4-hour. USD Nokia on a 4-hour. USD ZAR on a 4-hour. Okay? So now we have congruency in the sense of this is a denominator, right? X over D. X over D. This is numerator over X. Numerator over X. Numerator over X. This is a fancy way, numerator over X. This is a fancy way of saying, let me get my, okay. When the US dollar is strong, so it's on the numerator, so this is strong, X would be the weak, so this should go up. Okay. When the numerator, the one on top, is strong, this should go up. When the numerator is strong, this should go up, right? The force is on the upside. When the dollar is strong, this should go up. Conversely, the dollar's down here, so when this is strong, it'll pull it this way. When this is strong, it'll pull it this way. When this is strong, it'll pull it this way. If this is strong, it'll pull it this way. So now, your main decision is, will the dollar be strong today or not? And you might not be good at that. So check this out. What if you even removed that from the process? You're like, well, I don't know if I should be buying dollar today or selling dollar today. I just don't get it. Like, I don't understand the fundamentals. I'm kind of just learning the technicals. But to make those decisions and like, why, So how about this? What if you only said you want dollar to go up or down for the rest of the year? You just make that decision. See, this is now the same decision a hedge fund manager has to make. A hedge fund manager has to say, okay, I want to short the dollar. So I go to my team and I say, short. Or I go to a portfolio manager on the team and I say, I need you to do something for me, right? So the decision-making process would be the dude on the top. Well, you're the hedge fund manager for your own fund, which is just your money, right? So you mean to make this decision. So even if you have to flip a coin, you somehow get to a decision and you say, I only buy US dollar in 2021. Now you're like, well, how do I know that's the right decision? We're looking not for the right decision. We're looking for the consistency. Like I said, if I had a team of portfolio managers trading both ways, not like a broken gate, but specializing because I asked them to, and they have the capability of carrying it out, at the end of it, I will always be on the right thing at the right time. Okay, not hedging each other, by the way, because we're smart enough to know not when to be short. A bear, like if I told Maida to only sell euro dollar, she's not going to sell it on the way up. She's not delusional and deranged. She's not a degenerate gambler. She'll say, no, I don't like this. She'll wait. So the person buying euro dollar is just killing it because they can see the trend. And then as soon as that's over, they stop buying and Maida starts selling. Now, that's genius, right? I know. Thank you. But what you're getting at is you somehow make your decision. You can't always be right all the time. That's why you have multiple people, right? So you have to be right all the time, some of the time. Not all the time, every time. Because, once again, you're not that good. You won't even be that good in 10 years. So how do you be good? You make a decision and then you carry that out. So now, I'm not even saying specialize in one currency. First of all, I'm like, you should right, or one currency pair. What I'm saying is you should look at all pairs through the lens of the US dollar filtered with a bias. Right? So now you say, I only buy dollar, for example. I don't know if that's your decision, nor do I care. You'll still make money. You have to truly understand that. You can disagree with my point of view. I can disagree with your point of view. If you're a kick-ass trader and I'm a kick-ass trader, we'll both make money. Okay? Now, maybe this year you get a Murcielago and I have to drive a stupid Gallardo. Well, that's my problem because I was wrong on the trend. You were better on the trend. You got a better car. Okay? Next year I'll do better because maybe the trend, right? Whatever. So here's the thing. So you can only buy dollar, let's say, because you've made a decision. You're American. You think selling the dollar is anti-American. Great. I don't think that way, but whatever. You made a decision. So you're only buying dollar. So you look at this chart this way now. So you're only buying dollar, which means you can only sell. Do you like selling a higher high? Do you like selling this higher high? Do you like selling this? Do you consider this resistance? Okay. And you might say, well, I want to sell these things. Oops. I want to sell these things, but that don't look good. Right? That don't look good none. And then you can only buy this one because that means you're only buying dollar, which means you're going to push this up. Does that look good to you at the moment? Maybe not at the moment. Does this look good to you? Maybe down here, right? You can only buy this. Does this look good? Maybe. All right. The maybe part is you're making decisions. But you know what you want to do. You want to buy this. Does it look good now? No, not now. Not now. Not now. Maybe later. Definitely not now. Definitely not now. Definitely not now. So you see, you walk into the game and you're like, not today. Okay? Thank you, Mato, by the way. Okay, now imagine your consistency. You only buy dollar in market conditions that look good to you. Does that sound like amateur or does that sound like professional? You're moving from trading to profiteering. You only trade when you're absolutely certain you're going to make money. Not that you're scared, but you're smart. Yeah, Brinsley's got it. Okay. Yeah. Good answer, right, James? Good answer. That's a good answer. Would you do the thumbs up? You asked an innocent question, and maybe I crushed you and rebuilt you back up. But I don't think you'll ever look back, or we just don't connect spiritually or metaphysically or whatever it is, right? Whoever told you that other stuff is really innocent, they read it in some other guru's book, and that's they probably even believe it, which is nonsense, of course. Cool. All right. So, cool. So now if you're a bear, you're destroying it. Oh my God, it's so wonderful. Ugh. All right. So let me ask, for 2021, am I a bull on the US dollar or a bear on the US dollar? Thank you, Jimmy. So isn't that nice, though? I get out of bed, and I already know what I want to do. I know my purpose in life. Now, right? I know my role. I know my place. I'm like the third wife. I'm the third wife. Yeah. So I know my role. I know my place. Pretty simple. Pretty focused. But that's important, I think, right? Could Joe Biden make me change my bias? Yes. It would be very difficult for a president to do it. Yeah, I almost had to hedge that. I wasn't sure if that was too rude or not. But I was thinking in Chinese culture, though, honestly. I was thinking in Chinese culture. I mean, you have to imagine how poor China was like 300 years ago. Like, oh my God. And there'd be some man that actually was rich. And everyone else were peasant farmers, right? And there were so many people. And of course, women were so undervalued that it was a good thing for society for this rich guy to have multiple wives. So there was the first wife, then there was the second wife, and the third wife, and the fourth wife, and the fifth wife. But they all had roles. They all had responsibilities. And the first wife was like the mother to all the other ones and would run the show, right? She wasn't the one having a bunch of babies. She was the boss, right? It was her house. So anyways. All right. So I know my role. Whether I like it or not is irrelevant. Okay. So I buy low. Do you guys remember how scary it was as a trader when you just every day you had no idea? Do you guys even remember that? You'd open your charts, you got no trades on, and I guess you're going to do some skippy scalpy or something. You do remember? Well, I guess I'm going to do, And how long would you trade? Would it be 3 or 4 hours? You sit there, you put on 8 or 9 trades. Sometimes they win, sometimes they lose. Okay. Now you can do it. I'm not picking on the style. What I'm picking on is the trading in the unknown. Like trading in the dark, really. You're like, well, okay, this crossed, so I guess I'll buy it. That's the scary part for me. Okay. So we can go through sort of simple day trading techniques. Okay. And you'll see even day trading, which for some is a big picture. How many people at some point in their career, let's say, holding a trade for a day was a big deal? Like a whole day. A day trade was long term. Right? Every session was a new session, which is actually pretty good. So like this is Asia, this is London, this is New York. Okay, Asia, London. Actually, that wouldn't be true. So anyways, let me stay focused here. If you knew every single day, every day, it will never change. Every day, you want to buy in this zone. You want to buy in this zone. Okay? You want to buy in this zone. You want to buy in this zone. You want to buy in this zone. Okay? They overlap. You want to buy in this zone. Sometimes it won't work. Don't know. This one's questionable where the stop would be, but anyways, and also like indicators are supremely important, but your decision making is even more important. Like I think traders get really mechanical where they might buy this, but they won't buy that. And they lose sight of that they just want to be doing this. This is why I teach not just day trading, but swing trading. Because swing trading reminds you of your purpose. And it gets you away from only tactics. It reminds you of the strategy. So the strategy is this. And then inside of that, it becomes more and more tactical. Like this is a buy. This is a buy. This might be a buy, right? All these things. This might be a buy. This is a buy, right? And what happens in the blue is you forget that you're just forming a role reversal. You just forget. Because the trick with day trading is, like not even day trading, like intraday trading, is what if you had 9 trades in this process of 3 days? And essentially, you made a little bit of money or broke even, but for 3 days, oh, dang it, it's just not working. You lose sight of this, don't you? You give up on what you're doing because it hasn't happened fast enough. Okay? There's a great commercial about customer service or something, and some random company was talking about how great their customer service is, how fast it is. And then it showed a woman at like a Starbucks type cafe, and she goes up to the counter, and the cash register, the order taker says, "What do you have?" And like, "I'll have a latte." And so she says, "Okay," hits the button, turns around, and then the woman at the ordering woman says, "Excuse me." So the cafe person turns around, "Where's my latte?" It's been like 2 seconds. Right? Like, "I'll have a latte." "Okay, thank you." Beep. "Excuse me, where's my latte?" Like you get so caught up with the instant gratification that you forget what the strategy is, and it's all tactics. Right? And nothing wrong with tactics because you can't trade at all if you don't have any tactical capabilities. Right? So you start with technicals and then you learn fundamentals and now you become more strategic. Right? So, so that's kind of how you put these things together. So now you know this week or even this month, you are looking for something like that. How nice. And you never forget. And you're like, well, if this doesn't work out, it'll bottom out and I'll wait for the break. So you'll trap it like a range, let it break, catch the pullback, and now you're gone. And that's a day trading technique inside of your swing trading techniques. And inside your swing trading is going to be highly influenced by your position trading. Or you can just randomly do different crap every single day because you have no idea. Which one do you think is likely to work on the long run? I know, right? So this is why, a couple of people yesterday heckled like, too many indicators. Why is it too many indicators? You don't understand. So like I could say, well, let's get rid of all my lagging indicators. We'll kill that. 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 Okay. Now I don't have any lagging indicators. I only have leading. Now all these other ones to the left are just showing me where we were. I could kill them too, but I'm looking at one thing, one indicator, right? And that's pivot points. I just happen to have them on multiple time frames. It's not too many indicators. I can see the matrix. That's why I look at this. On top of that, I'm using price action as a leading indicator. Now, price action is a leading indicator because we would say, right, because this was resistance and we broke it, in the future it will become support. It's leading. I'm not interested that we're here. If I was a bull, I was supposed to buy at 71.67. Of course it made a higher high. Of course. So now that it's made a higher high, it's not a time to buy. You're supposed to buy down here. That's why we have very clear rules of engagement. So a leading indicator would tell me this. We made a higher high. Congratulations. I'm going to buy the higher low. If you like that, you should have bought it down here. So this is the sad thing, right? We know amateurs are kind of the opposite. Amateurs don't buy here, do they? They buy here. Why? Because it broke out, and that's the whole problem. That's the whole problem. We know it. Okay? We know amateurs buy here, and we know they don't buy here. Forget about professionals. Just let's talk about amateurs. Your old you versus what you're supposed to be doing. You're probably somewhere in between. Right? Data says, well, so if it's a bearish London and New York, and well, look, it's even easier than that. If you are a bull, you only buy dips at support. Okay? Okay. And by the way, I'm not drawing on that particular price. Okay? I'm going to use my erasing tool. I'm not saying anything about this. I'm just drawing the green pattern. Okay? If I feel like there was, okay? If I feel that there's upward momentum, okay, then I'm going to trade it continuously this way. So I'm always going to buy a dip. So you're like, well, if London opens this way, New York, whatever. Now, you can expect market opens to be either good opportunities or dangerous opportunities, but you know the volume and volatility is going to be there. But no, I wouldn't even get caught up in that. Just really digest that you only buy low at support. Low isn't even important. At support. You only buy dips and support. And if it stops making higher highs, you stop trading. And you look for the next support. That's it. You buy low, it will make a higher high. If it does make a higher high, you now say, I guess I'll buy the next lower low. You buy the lower low, it makes a higher high. You're like, oh, it made a higher high, I guess I'll buy the higher low. It makes a lower low, you're out. You're like, that's beeswax. I'm not going to buy lower lows. And you're done. Okay? Okay? What you don't want to say is, well, if London does this, New York has to do that. No, whatever, just whatever. All of it is just whatever. And it's much more like you either made a higher high, and if so, you're going to buy the higher low. What if it doesn't make a higher low? Then you won't buy it. And then you'll get really good knowing to get out here and leave it for next week or do the front run. But either way, right? Either way, you're going to buy this, you'll buy this. So, using these different time frames, so now you have to imagine this was bullish, this was bullish. There was probably one out here which was missed, and this was bullish, and then this is neutral, and this is neutral, right? And you can get caught up in this section where you're like, for 4 days you haven't made money, or you haven't made a lot of money, or you keep getting knocked out of break even, or it just hasn't broken out the way you thought. And you're lost in the day, but you forget where you're going for the week. For the week, we're going here. So this is just a double bottom, which ain't bad for you. And now we're up here. So that's what I'm saying. If you just traded the trend, which you expected in advance because you did your analysis or you flipped a coin, you would have bought this. Now you're up here and you're like, yeah, I made a higher high. Amateurs will buy the higher high. And you're like, well, it's going to come back down and I'm going to buy the higher low. So you're not even expecting that today. You might do it tomorrow. You're always tomorrow. We're always concerned about tomorrow. Always concerned about tomorrow. So think about it. On Sunday, you would have been here. Okay? Whether it's Friday or Sunday, anyone that's taken the swing trading course would know, as a bull, that's a buy. There's no other discussion. You're a bull. What discussion do we have to have? Well, but no, there is no discussion. If you're a bull, that's that. If it goes down here, you'll probably buy that too. Plan A, which we do all the time. Plan A, Plan B. Which one's going to work? One of them, both of them, none of them. Okay? Here's the cool thing. If you're a bear, right, you might have sold this. And you were only profitable for 2 days. I'm sorry. That's the whole point, though. Bears made money for 2 days. Bulls made money for 1 day. Okay? So this was a plan here, the confluence of weekly and monthly. Okay? This is why I say, in one particular year, a bull and a bear will do what they are supposed to do. One bull at the end of the year will have a cheap Lamborghini, and the other one will have the nicer Lamborghini. But they did the exact same job. What did they do? It's the same thing. Okay? It's the same thing. It's just at different prices. But they're doing the exact same thing. Selling at resistance is exactly the same as buying at support. So why does one get the $150,000 car and how come the other one gets the $300,000 car? The trend. But even the one that is quote unquote wrong made money. And here's the other thing. What you'll find is, okay, the bears did really well here. And they're like, ha ha, I make more money than you. I'm a better trader than you. And then you get your double bottom, right? Higher high, higher low, higher high, higher low, higher high, right? And all of a sudden it's their turn. If you really get it, I wouldn't be shocked, right, if they actually both drive reasonably nice Lamborghinis. And certainly not a Gallardo. Okay? Okay? Wowzer. 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 Woo! Oh my God. That was something. Holy smokes. If you catch some of these things, they should be game changers. Roger's going to for a minivan. Yeah. Brinsley says more risky counter trending. That, and it's just not worth as much. But you certainly can do it. Like in year 20 or whatever, you can do it. I still don't recommend it. I recommend you maintain, it's funny for me to say this, I recommend you maintain a healthier lifestyle, which is really funny. If anyone that knows me really well, like lives with me, lives near me, friends and family, they would bust out and just full rolling on the floor laughing that I just said that. But yeah, I would recommend a healthier lifestyle where you just buy the dips as a bull, and then you'll have a lot of time. With being a trader, you have a lot of time. How many people would like lots of free time? Right? That's because you're always planning tomorrow. Like those exotics I missed. I missed them. Okay, I missed them. I wanted to get them. But here's the thing. Those pairs were going up for days. And yet I'm still like, I want to sell them. I want to sell them. Oh, here could be a good place to sell. Oh, it's a little early and that one's not quite ready. And then finally one of them hits. I'm like, that would be that's where I'd expect the red. And all of a sudden it turns red. And okay, well now I'll catch the lower high. And then over here and over there. Like in that case, I have days, maybe weeks of time to set those up. Because I know for a fact, by fact I mean my mind. In my mind it's factual. In my mind, I know for a fact that those exotic currencies are going to be worth more at the end of the year. Whether it's true or not is irrelevant, because I know they're factual in my mind. So I know what I'm going to do, and I know how to do it, and I will do it. Okay? Or you're like, well, what should I do? Should I buy them? Should I sell them? Should I buy Bitcoin? Should I sell Bitcoin? Is it going to go 2 million or is it going to go to 0? Like, how could you possibly live like that? It's like disturbing. Okay? So I missed this. This is upsetting. We even talked about it yesterday, but I know it's too early, so I believe it'll come back. But of course, maybe it doesn't, right? But this is obvious. Okay? That is the counter trend, in fact. Okay? I just said it's too early. Okay? I'll get another chance next week. But I wanted to take this one, and I wanted to take this one. And is my order still there? No, I took the order out. And so, right, and I wanted to be short this one. But I'm not debating. Because here's the problem, right? If you haven't made a decision, you look at this, and what do you think? You think up. I see that, and I think down. So, right? That's what I'm planning. So later today or tomorrow. So now what do I do? What if I only traded exotic currencies? First of all, I wouldn't have missed it. Okay? Okay? I'm always planning tomorrow. And I might actually get an opportunity to trade tomorrow today. So when you don't have that foresight, which I call strategy, you log into like the New York session, which is starting now, and you're like, so what's up, fellas? What are we doing? And then you're like, some news comes out, a tweet comes out, a news thing is released. Oh, look at look at jobless claims, look at retail sales. Oh, and he does this for a little while, and you tried to pick up money, but the market is too efficient. Okay. The market is so efficient that not a lot happens in there. So you're really working hard to make very small amounts of money. You will get sick of that, and then you'll increase your lot size, and then you'll blow up your trading account. Okay? Long gone are the days where, let's say, retail sales comes out and you make 300 pips on a euro dollar. When was the last time you made more than 100 pips on a euro dollar in less than 15 minutes? When was the last time? Have you even done it? Have you even made 100 pips on euro dollar in 15 minutes or less? Yeah, you've never even seen it because the markets are now efficient. Hey, 20 years ago? Yes. Definitely have done it. Okay? Even USD yen, the smallest ranging average daily range of all the pairs, I've made hundreds and hundreds and hundreds of pips in less than 15 minutes. But back then, the market was inefficient. There were giant gaps in the market, and it could work for you and it could work against you. So now we have a very, very mature market, very deep, very liquid, lots of market participants trading for all different reasons. Retail sales will come out and it'll move 18 pips. So it's not that it's less important. It's that you have to have everything in context. So to show up in New York now going, okay, what's up, fellas? Let's get some trades on. And you're starting from scratch, no trades in your account, right? And you're like, you're going to make your bread for the day. That's okay, but you're going to have to work very hard for that. So if you now fold in long-term trends that you identify through technical and fundamental analysis, and then you put that maybe through a filter of seasonality, you'll get monthly biases. And then, right? And then from that, you will use swing trading, day trading, and market opens combined. And your trades should show consistency because they should all have a theme. If I look at your trade history from yesterday and you're long and short, long and short, long and short, you're not listening to me. Now you are listening to somebody or listening to yourself. And it's fine, but if you can at least accept my advice and add that to what you're already good at, I honestly believe your trading will improve because we're now incorporating some of these other things. So again, this had been going up for, since last week. And the whole time I'm looking for reasons to sell. Okay. Do I sell the higher high? No. 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 Now, I got something in here because I'm doing some other analysis. And some other analysis told me that this looks pretty good. But you don't see it here. That's sort of my alpha. And I missed, what did I miss though? The high? No, I missed this in the context of a plan. So now I'm like, oh, dang it. I missed it. Like I missed it by 20 minutes. I wasn't quite at my desk yet. And then I played it too conservative. I'm telling you, I almost sold it. And then I'm like, I should be conservative. I put a limit order in. So anyways, coulda, shoulda, woulda. So now what? Oh, well, I'll have to wait and sell up here. So now I have to wait. Okay? Now I have to wait. Okay? Okay. Mikhail says, hey, why do you think USD ZAR when the trend is up? Okay. Great question, Mikhail. First of all, you're right. The trend on that time frame, okay, 15 minutes. Okay? I don't consider that a trend. It's a trend on that time frame, yes, but it's more like, to me, in the context of the year or even the quarter. So right now I got this sort of idea for a quarter, and it does temper my enthusiasm, and I'm already looking forward to April, May, and June. Mostly because the weather's going to be nice, but also because I tend to do better. Okay? Anyways, on that time frame, it says up. You're 100% right. By the way, I predicted that 16 weeks ago. Anyways, so now, here's the thing. Fundamentally, not news, not your 15-minute chart, not even an hourly chart, okay? I have made the decision, actually two decisions if you really want to get into it. One, I am a bear on the US dollar. I will sell it, I will sell it, I will sell it, I will sell it, I will sell, sell. Maybe not today, maybe not tomorrow, but I only look to sell. Is it the right thing? I don't know. Is it the wrong thing? I don't know. I just know what I'm going to do. And I'm going to sell in market conditions where I am certain to make money. Now, I might lose, of course, and I do lose, right? But the thing is, unless the market conditions are favorable, I'm not going to take the shot. I'm going to pass the ball. Pass. So yesterday, almost on the peso, if you remember, I said almost, but it's too early. The day before that, pass. Day before that, pass. Okay? I'm just passing it. Pass. But when I got the shot, I'm going to win the game. I'm going to take the game winner, right? So right now I'm setting up the next move. I'm pivoting to the next move. The ball's here. I'm over here and I'm open. If the ball goes to me, I'll make a shot. Okay? So how did I get to that? Well, that's my fundamental analysis of the central banking policy of the United States, which might change tomorrow because they're in a meeting right now discussing, is their policy appropriate? That's what they're meeting today. I can take you through the entire agenda for today. The first speaker that is actually probably standing in front of the FOMC right now is the person in charge of the New York Fed's trading desk, because they manage things like open market operations to maintain the Fed funds target rate, and on top of that, manage all the foreign exchange. The first person to speak at the FOMC meeting is the Forex dude. Love that. Right? Love that. Forex person speaks first. They have to ratify and then they have to reapprove. Okay, so that gets done. The other side, and I talked about this last year, we talked about portfolio rotation out of the United States into foreign investments, such as or including emerging markets. Okay. So I look at EM now as a yield hog play. Okay, so I have a yield hog play, and a monetary policy play. So a macro play monetary policy play in this. You see that? So Mikhail's like, well, why didn't you buy all of that? Because I've made all these decisions and I will ignore all of this and just consider it opportunity cost. If it does trend up for months and I'm not on it, well, I didn't lose money, and that's the most important thing. But when it does turn, I'm going to take the shots. I missed it by 2 shakes of a lamb's tail. Should be on it. Shoulda, coulda, woulda. What's the next roll? Okay? I'm going to do something like this. Probably won't happen today. If it does happen today, I'm going to do it. Might happen tomorrow. Well, I'll do it. So, for example, you can do something like this, right? Okay? Then you can do something like this. Not saying that's how you do it. I'm like, you could do it. Or at least mentally. Okay? If you can't do it mentally, then forget it. Okay? Now here's the thing. If you want to get advanced, you can say, okay, that's a 786 or a 618. So it's gotta move up sooner than later. Okay? This is a 21.4. This is a 618, 50%, okay? Now, you can say, well, what if this was the 618 or the 382? So now you would do this, okay? And call that the 382, which hasn't happened yet, which is interesting because then you reverse engineer the whole process. And you say, we get the dip off the lower low. So let me draw it this way. You are already setting up the channel that doesn't exist yet, or it hasn't been born yet, right? So this says it's going to drop to 15, it's going to rally up to 15.15, and then you're going to get short. Okay? Now, the short opportunities are short here. That's a 382 roll reversal. What about the 50%? Doesn't look that amazing. What about the 618? That doesn't actually look that amazing either. And then, and then the 786 is way up here, and that's too high. So you look at probabilities now, and at least for the end of the day, that ain't going to happen. Okay? That ain't going to happen. And if you traded the 382, your stop would be above this, so you get that included. So, if anything happens today, it might be something like this, and then I will do that. Will it happen? Don't know. Irrelevant. Okay? Not likely to happen. Potentially. Okay? Isn't that neat? Are you putting that kind of thought? See, I'm already on tomorrow. I missed the first move. Right? So sad. But I think about these things. 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 And I create opinions. Okay? Once you've made those decisions, it becomes easier. It's not easy. It's just easier because you know what you want to do and why you want to do it. That's all I'm trying to preach. I want you to make a decision so you know what you want to do. Then you should go and justify it somehow with some kind of research. Okay? Even if you go to fakenews.com and you're like, well, Trump said this, so therefore dollar is going to do that. Okay, whatever. Just make a decision and back it up with some nonsense. Reality isn't relevant. It's not what you know, it's what you can prove, right? So in this case, you think the USD Rand is going to go up. Good. Get on it. There's plenty of opportunities for you. Okay? Look at this. If you were a bull on this while I was a bear, okay, by the way, this is an obvious sell. Not a problem. This is an obvious exit. That's not a problem. But if you're a bull, you might have bought this. Oh, I wanted that different color. If you're a bull, you might have bought this, but you definitely bought this, and you definitely bought this, right? And you definitely bought this, and you definitely bought this, and you got knocked out at here. That's why I was selling it. Like, oh my God. Like, if you just took your turn, you made money. And if I did my job, I made money. And I say, hey, Brinsley, nice Lambo. Okay. Yeah, how do you find a currency pair that you think is there but is not there? Okay, you... how do you get the default view? Because it's not all. Anyways, if you don't have all your currency symbols, very often there's a standard setup. Maybe it looks like this. You log into your account for the first time. You're like, dude, where's my rand? Oh, well, I guess I can say that. Where's my whatever? I can't find my whatever pair. What you do is you right-click it and you do show all. And there you go. It unleashes the beast. It should be similar on MT5, I think. I'm going to have to make the move over to MT5. But I haven't done it yet. Okay. So I think I'm done. I'm spent. Stock market's open. Yada, yada, yada. So I planned out tomorrow. Very nice. Okay. Very nice. So I've been preaching. How many times did I laugh at the guy that says I have a jet? I have a jet. I'm the largest real money options trader, and I'm in my jet. How many times have I laughed at that guy? My point is, I'm not trying to be the best. I'm not trying to be the rightest. I'm not trying to say, look at me, you could have this. I want you to succeed on your own in the sense that you learn how to make your own decisions. I'd like you to be different than me, better than me. I'm no example, except for how much I love what we do and how much focus I put into the role of being a trader and how much thought should go in. So this is why I don't offer things like an alert service and stuff. Like, I want you to think about it. I want you to enjoy what we do. I want you to be your own because it will work. That's the most important part. And maybe one day we can work together. And I can help in other ways than teaching you how to trade a 5A cross. But maybe we can work together in a different capacity where you do what you do and I help you do that better. Right? So anyways, the jet boy, he's been shut down by the government. So apparently he doesn't have a jet. Okay. So I don't have a jet. I don't think I want a jet. Okay. But I'm here. I've been here almost every day on YouTube for 15 years. And before YouTube, I was probably the first person to use webinar software, which wasn't even called webinar yet, to show you my charts in real time. It's before YouTube was even invented. So that, right? The example there is if I've never really had a day off in those 20 years, this is truly the get rich slow scheme. But it's important that that's how you look at me, not as the rich guy in a jet, but more like the guy that never fails, the guy that always shows up, the guy that you can lean on, the one that takes everything seriously. And from that, we can build an empire together. Right? Not look at my Rolls Royce. Wouldn't you like a Rolls Royce? You should pay me $99 a month. So that's not who I am or how I work. But instead, the ridiculous, sickening work ethic. And I bring this because before Forex, I was a venture capitalist. And before I was a venture capitalist, right, investing in ideas, I was an entrepreneur creating the ideas. And before that, I worked in a nonprofit. Like, if you think about that, I was a leader of a nonprofit, sat on the board of directors with George Soros and someone from the United Nations, and Vice President of Arthur Andersen, Vice President of General Electric, former president of AT&T. This is where I come from. It's not, if you want a private jet, you should pay me money, or I'll make decisions for you, buy my alert service, and I'll make you rich too so you can have a jet. That doesn't make any sense. Okay? It doesn't make any sense. So I want you to build a business. I want you to create value. And from that value, you can share that value with customers, clients. And from this, you can create a life, a lifestyle that improves your standard of living and makes you happy. That's the promise that I try to provide every single day. And that if you have a ridiculous, sickening work ethic and a long-term point of view, you can make this your life. Right? Some guy might make $1,000 a month. Some gal might make $10,000 a month. Someone could do significantly better. But that's only assets under management. That's not me promising you anything. So I want you to really focus, like, it's not about the jet. It's about creating value and loving what you do all the way. And if you do that, I think you'll be fine with the rewards. And part of that reward will be freedom and time. I worked at home the whole time my children were itty bitties. How much is that worth? I shut down my office and I worked at home the entire time my children have been alive. Isn't that cool? That they can come downstairs and there's Daddy. Daddy's doing schoolwork. Daddy's doing Forex. Daddy's in a webinar, but Daddy's home. I can come up and hey, how's it going? I can walk outside. Right? Like I can spend time with my wife. I'm going to see my wife later today, like in an hour. I'm like, hey baby, have a cup of coffee. That's rich. Because it's a rewarding, fulfilling life. We're going to try to explore some of that in my presentation later today on GDP. Does it matter? Can it lead to happiness? I don't know if it cures depression, but so we'll explore that. And instead of me telling you or reading from a book, right? We're going to ask the United Nations what they think through their research. Okay? So anyways, peace on earth. May the pips be with you. May your profits be above average. Thank you again for the respect that you show me every day. I do appreciate it. I do note it. And I will see you tomorrow. Tomorrow we're going to get the FOMC announcement, and so you're going to have to download the press release and read it. There'll be some sort of volatility, but most likely just it'll do what it wants to do, and we'll be there because we already know what we want to do. So you'll either get an opportunity or you won't, because you have total control and a ridiculous, sickening work ethic that leads to discipline. Without fail, discipline. So I'll see you guys in a few hours if you're in my live group to do the macro stuff. Everybody else, I'll see you tomorrow. Cheers.